What's up, everyone? It's Major Tom from International Investing. It's early Monday morning, and we are going to talk about some things here. We got some interesting developments in the market this week. So I think on Wednesday we have our FOMC rate decision, and then throughout the week we have a few more important earnings. I believe Apple is this week, which is the really big one. We also have a couple of things that we found for pricing power wise on certain sectors that we want to talk about. And we do have a new tool in the works that has given us some insight into some things that are going on here. So, without further ado, let's take a quick look at a couple of macro and micro things. This is our new tool, but before I go into this, let's pull up the SPY outlook, right? So going into earnings, we priced SPY at 385, and then after the earnings started to be reported, SPY has our projection for SPY has kind of slightly gone up to the point where SPY almost met when our projection was at 397 and SPY was at 404. Our projection almost met the actual price, which is what we want to see. We want to see it being accurate. But now we're starting to see this divergence upwards, and we're still projecting SPY at 401, right? Now, why is this important? SPY has kind of gone through this little choppy phase. So if we go to like the 1 hour chart, we can kind of take a look at what I'm talking about here. Maybe even more. Let's go for like a day. SPY has sort of been in this choppy phase all the way back here at the was at the 427, and then it kind of has been in this channel right here at the 350-ish. We've just kind of been chopping in between here, right? And I think a lot of people are wondering, why is SPY chopping in between here, right? Like SPY is everyone's used to SPY just continuously going up, as we've seen in the past, right? You know, yes, we have pullbacks, but ultimately we go up. Well, I think what's going on here is obviously SPY can't just go up if all the companies inside the SPY are doing bad. Oh, sorry. But what I think is going on is the companies in the SPY are reporting mixed earnings. So for every good earnings report that we're seeing, there's also a bad one. And inherently what that will cause the SPY to do, it will cause this chop, right? So we can't just push higher because there's companies that are doing bad earnings, and then we can't just go all the way down because there's companies that are reporting good earnings. So there's a very mixed market going on right now. And I think that's contributing to this back and forth between the bulls and the bears. And again, if we take a look at the SPY outlook, we're still projecting a 401 price target here. And if you take a look at this upper resistance line, we're hitting it right now in the pre-market, and we're at 415.92. So be on the lookout for a rejection at this price level. We got like a little double top going on here. Be on the lookout for a rejection at this price level. I'm not looking for it to go all the way back down to 350, but you know, a short-term move to 401 would be more healthy in what we're looking at. It would also show that we are consolidating on higher lows, which could cause the SPY to rebound bullish. So be on the lookout for that on the macro environment. FOMC wise, if he does go with the 25 basis point hike, we do expect the market to pull back a little bit, probably to that 401 area, which is the sweet spot that we're looking for. All right, so this is the new tool that we're currently working on. It is a work in progress right now, so not all the numbers are accurate and everything, and you probably can't even see what's on my screen. But essentially, what this is you know, it's a sector heat map, and typically when you look at a heat map, It's broken up by like food and beverage, and it's broken up by like real estate, stuff like that, utilities. This is a more specific heat map. So like we have things like fast food, we have restaurants, we have casinos, hotels, airlines, electrical utilities, smartphones, TVs and monitors, daycares, online retail, oil, video games. So, so this is a lot more specific. And what we can do is we can kind of choose how these companies are highlighted by the earnings per share spread. So currently, we've already identified this trend, but currently the airlines, if you look at the airlines, if we have an EPS spread of zero point 0.4, all the airlines have an EPS spread of zero point 0.4 to the upside. So that immediately tells me that airlines still have a lot of pricing power. It tells me that they still have a lot of growth in store for next year or this year, and I want to get bullish on airlines. Now, just taking a step back and looking at the rest of these companies, there are some other ones that stand out to me, like oil. So, for example, Exxon and Chevron just reported, so the actual earnings per share aren't updating. But if we take a look at this, COP and EOG, which are also oil companies, are highlighted red. Why? Because they have a EPS of zero point 0.4, but it's to the downside, right? And these ones that have an EPS of zero point 0.4 to the upside are actually showing pretty promising outlooks. And it's interesting to see Home Depot over here and other tools companies doing really well because to me it doesn't feel like construction has slowed down yet. At least from my job and what I do, it doesn't feel like construction has completely grinded to a halt. There's still some commercial owners going out and spending the money to get that return on investment. And I think as long as that's going on, you're going to see these building supply companies and these tool companies jump back up. And I think we are seeing that. So I don't know if I want to take a position on Home Depot, but I definitely want to take a bearish position on oil, and I definitely want to take a bullish position on airlines. The biggest airline that has the biggest gap here is looking like United Airlines. They're going from a negative zero point 0.6 all the way up to a positive 3.7, which is almost unheard of when you're talking about gapping EPS. Delta is also a pretty good stock here. You've got a actual of 0.25 and a forecasted of 2. So again, that's another pretty big gap. If you're looking to just buy shares in something cheap, you could always go for the American Airlines play or the JetBlue play, and then just run the wheel strategy selling covered calls or selling cash secured puts to get into those. If you sell cash secured puts on American Airlines and JetBlue, I highly doubt you're ever going to get exercised on, especially at the price that they're currently at. Yeah, if you take a look at American Airlines here, it got hammered down from the 15 all the way down to like 1260, and then they reported pretty good earnings and then gave an amazing forecast. So I'm expecting American to go back up to like 15, maybe $16 a share. If you want to sell cash secured puts below 1250 and just collect premium, this is a good stock to do it on. And if you want to hold shares and ride it all the way up to 16 and just sell covered calls every week that it's up, you could do that as well. So that's another play for you guys if you're looking to play it that way. There's many ways to play these things. Personally, I'm targeting the United Airlines leaps, so calls that are going out more than 3 months of expiration, and I'm targeting Twillo for short-term 3-week calls. Just taking a look at this right here, like everyone's jumping into the tech stocks right now, and Twillo has partnerships with all these big tech companies, and they've kind of always go like downwards until they report earnings, and they pop up like 30%, and we see it every time. We see it right here. It was at like $59. They kind of hammered the stock down, and then boom, reports earnings. It's up to $80, and the fair value for this stock right now is around the $69 mark, and it's currently trading at 52. I just don't understand the price movement on this and why it was hammered down. If anything, I feel like it should be up here at like $80. So, short term, I think the earnings kind of gives everyone I think the earnings kind of price adjusts Twilio to the upside. Maybe we get our $69 price target. Maybe we get our $80 price target. I'm not sure. But short term, this is probably the stock I'm most bullish on. If I can get any of these contracts, like if they want to hammer this price down to 51 or 50, I'm just going to load the boat on these calls. And, the more I can get, the better. That's the way I'm looking at it. Anything else? Oh yeah, puts on ZOM. So looking at ExxonMobil here, currently already 116 in the pre-market, so it might already be a little late to get to this play. But just looking at their last earnings report, they had the little pop up to 120, and their future forecast is actually bearish. So I was expecting the stock to do a little bit of a pullback here, and it looks like it already is in the pre-market. So I might be a little too late to hop in these. But typically after earnings, these oil companies have been trending downwards. So if we look at the last one, we had a little pop up to like 118, and then it trended downwards all the way to 98. I'm expecting it to do something kind of similar here. Maybe it trends downwards a little bit faster because the forward-looking guidance is actually worse. So if we take a look at the EPS down here, see how it's trending downwards. Typically when EPS trends downwards, you have a lot of the long-term holders decide, hey, do I really want to hold this stock and just continuously lose value? But you also are going to start having the short sellers hop in now because you've got 1, 2, 3 earnings that are all trending down. Now you have the fourth projection going downwards. And look, the environment that we're going into is the government's giving away all this free money for electric, no free money for oil. We're coming out of basically the Trump era where it was like increased oil production at home. Now that's kind of gone away because the Democrats are in charge. It's just how it is, the political cycles. And then the war started, and all that oil is being provided kind of internally by Russia. So there's very little room, in my opinion, for these oil companies, especially the ones out of America, to kind of make any lasting impact here and to kind of take advantage of the oil environment. You also have OPEC that cut barrel production, and it's just a really bad environment this year for oil companies that are from America. From America, in my opinion. Sorry. I believe that's all we're looking at. Let's take a quick look at the EPS spreadsheet here. We have Twilio, Roblox is new. I don't see anything here that's, glaring. Rivian maybe, Roblox maybe. They're both reporting earnings in like 7 or 8 days. Taking a quick look at Roblox. Roblox fair value is at 39. Currently being sold off here. They've got earnings on the 10th of May. I mean, yeah, if they want to sell Roblox off to like 32 or 31, and then, we play calls right before the earnings, I like that, but it's another one of those stocks. It sells off, and then earnings pops it up, and then it sells off, and then earnings pops it up. You're going to see this in the bear market cycles. So, for people that are not that experienced at trading, they might not understand this very well, but I was listening to a billionaire trader. I don't know what I don't remember what his name was. I was just watching these trading interviews with billionaire traders. There's a channel that does really good at doing these, and I think it's called Be the Trader is his channel. And what he does is all he does is interview very successful traders. He doesn't really give any insights himself. He does trade himself, but doesn't really make anything out of his channel as far as trading goes. He just interviews other people. He was talking to this guy, and it really resonated with me. What the billionaire trader said is, he said the same patterns work. The same patterns will always work. It's just a matter of how they sort of react. So, for example, he was telling me that like good news. So in a bull market, good news will cause the stock to just rally, 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 rally. In a bear market, which is what we're in right now, good news will cause a little like spike and then a major sell-off. And I thought that was interesting because I'm like looking at stocks and I'm like, I see this happening. He also said that earnings is another big one. In a bear market, people will look to offload shares of a company during the company's earnings. So like even take a look at Twilio, for example. Even though Twilio has been doing great, the stock's kind of been selling off, and then earnings is going to happen. The stock's going to pop up, people are going to sell off a bunch of shares, and the stock's going to come back down. That's just how it goes in a bear market cycle. So I'm fully expecting Twilio to just get a little pop and then sell off again. Maybe we can even play some downside after the pop to the upside. You know, um, but that's just how bear market cycles work. Is like even though these companies are doing great, even though these companies are reporting good news, you're gonna have sell-offs, right? And to just play nothing but upside in a bear market cycle is just exposing yourself to too much risk. So be careful what you do. Also look to potentially open spreads on SPY. If you start to see SPY at like 416, 418, it's a good time to just sell a spread right above the money, and then just hold that through the FOMC. If today opens bullish, if today opens bearish, again, you know what companies were bullish on, so look to get those calls at a discount. So we have plays either way that the market opens. If the market wants to open bullish, we can take credit spreads on calls against SPY. If the market opens bearish, we're going to look to hammer the calls on United Airlines and also Twilio. So thanks for tuning in. That's our strategy for this week. If anything else pops up, we'll probably make another video by the end of the week. But other than that, be safe out there and happy trading. Peace.